for Tuesday, May 24th. We are going to start off today with a chart of the Dow. We're looking at the Dow daily chart, and you can see we had yet another close under the 50-day moving average. Early on this morning, it looked like we could potentially be seeing a bounce off that 50-day moving average, but as the day wore on, there's really no reason for this market to run right now. The bearish sentiment continues to build up, and just to show you what the large money is thinking right now, I posted a link in the chat room. If you bought $1 million of 3-month treasury bills right now, the yield is so low that all you would get on maturity is $120 in interest. That just tells you that even with the crazy talk you hear about the debt ceiling, etc., people and funds are just willing to park their money and make absolutely nothing right now. So that's just a testament to the fear that's sort of building out there. And, there's a lot of indications that we've got a possible global slowdown starting. And even though it's crazy to say, you've got everyone talking about inflation worries, etc., do not be surprised later this year to see that deflation talk start picking up again. Anyways, with regards to the Dow, we continue to remain high cash, taking small gains and playing what we view as sure things, and for the most part just sitting out this market. And so far, it's been working great, in my opinion, over the last few days. My fear on the market is that we're going to see something similar to what we saw in March. We had another close under the 50-day moving average, and we could see some big-time extension to the downside over the next few days. Remember, we've got a holiday weekend, and, in this kind of market environment, are traders really going to want to be buying ahead of that long weekend? U.S. dollar actually managed to bounce or sell off today. The euro managed to bounce back, but, that may be more of currency intervention by other countries. Let's see what happens on this. SMH, another index, we got to close below the 50-day moving average on the SMH, so we've been unable to bounce back through that support line that we broke 2 days ago, so that is a worry too. So we've got the Dow, we've got the SMH now below their 50-day moving average, Russell 2K under its 50-day moving average, and there's nothing on this chart making me feel like I want to go out and start buying stuff. Like I said in the chat room, we're just sitting on our hands right now, waiting for the trades to come to us. Already went over the US dollar. We did have some nice plays, however. LVLT, rule of 2 in the house. Monster mover and winner force today closed right at our first target of 220. Just a monster 30-cent gain for us since our entries last week. Next target on this one, we're looking for a gap fill back to the 2008 245 level. Should go without saying, you should have at least taken some gains off the table, at least half gains, because our first target has been hit. We can look to add on dips, pick up a scalp position if we get any dips down to the 212 area tomorrow, but looking great and just a very, very nice mover for us. Sirius actually jumped back into this one today on the break of 226. A couple of things happening here. We've got a nice bounce back on the chart. We had Moody's come out and upgrade their debt, and then there's a rumor floating around, the usual buyout rumors, and the reason being they're saying Sirius pulled out of the Cowen conference. And typically when you see a company pull out of a big conference, usually, the implication is there's possibly buyout, merger, they're going to buy someone, etc. And we saw some nice volume come into Sirius today. What we're looking for on the bounce back, let's see if we can get 235 plus over the next couple of days. Stops on my entry, I'm looking at 219, although depending on the market, I may give it a little bit of rope to 215 and possibly add a dip. Again, it's all going to depend on how the market's acting while it dips. Now, a play we're on watch for the next rule of 2 is DRL. Now, I really don't like banks, but the rule of 2 stocks have just been fantastic this year. So this is one we're definitely going to stick on the watch list over the next couple of days. It's had a nice little up move, and this one could be pretty explosive on a break of 2. So keep a really close eye on this one. CTICD looks like the top may be in on this little pump. A break of 2 could see a retrace back to that 8-day moving average 183 or under. So definitely one to keep an eye on. And really, that's it. We're not playing a whole lot of stocks right now. In the chat room today, we had some fat gains on that new IPO, the Russian internet company. I believe we had, $4.50 scalps on that one in the chat room. I know you guys were banking on it. So there are some trades out there. We're just being very, very cautious. We're sitting on our hands and playing half positions and just playing the really solid setups like we've had on LVLT and Sirius, SIRI. I still have a downside bias on the market. I'd like to be proven wrong. If I'm proven wrong, we can always go in and start buying stuff up. But I'd hate to be sitting in a boatload of stock right now, bottom buying, and then the floor fall out of this market. So continue to remain high cautious in this market. And that's pretty much it. If you've got any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Good night.